What's up, everybody? This is Investing Sensei here to bring you another episode in the series of how many shares of a certain company do you need to make $1,000 a month, even $100 a month, and even $100 every single week. So in this episode, guys, we will be going over AGNC. That is actually a requested ticker. So if this is the list, so if you guys don't see a company you want me to do on the list or haven't done one in the past, let me know in the comment section. I'll be happy to add it to the list and we can eventually do a video on it. If you're new to the channel, consider subscribing with that bell notification. We're trying to get to 9,000 subscribers, so help me out. As well, drop a big thumbs up on the video. Definitely will help out the channel. Definitely appreciate it. But let's go ahead and get started. So if I pull up on Seeking Alpha, we put AGNC. We got AGNC Investment Corp. Let's go ahead and you'll see it's trading about $8. Let's go ahead and do a little bit about the company profile. If we look here, you'll see that AGNC Investment Corp operates as a real estate investment trust. So this is a REIT in the United States. The company invests in residential mortgage pass-through securities and collateralized mortgage obligations for which the principal and interest payments are guaranteed by the United States government sponsored enterprise or by the United States government agency. It funds its investment primarily through collateralized borrowing structured as repurchase agreements. You'll see that it is in the sector of financials. Industry is mortgage REITs. Employees, they have 50 employees, and this was actually founded in 2008. If you want to read more about them or see their investment investor relations page, you can go to agnc.com. But that is about a little bit about the company. If we look over here again, we can go and see at the year to date, see the performance. You'll see that it's actually down 48.22%. If we look at the 1 year, they're down 50.62%. 5 year, they are down 63.24%, and then 10 years, they are down 75.79%, and then the total max share since they went public, they've been down 58.01%. So has been any capital appreciation here, so definitely not looking too good there. If we look at the 52-week range here, you'll see that the lowest they've traded has been $7.36 in the 52 weeks. So the current share price is right around that price right now. Highest they've traded has been $16.75 in the 52 weeks. EPS is 2.77. PE 2.89, dividend rate is $1.44, and then the dividend yield is 18%. Quite a huge dividend yield there. Market cap is 4.32%, 4.32 billion market cap. So a small company here. If we look at the dividend scorecard here, again, they are in the financial sector as a REIT. If we look at the dividend summary, you'll see the dividend yield is at 18%. Annual payout, they pay $1.44 for every single share you own in the total year. Payout ratio is 47.21%. 5-year CAGR is actually a negative 6.17%. I'm assuming potentially they could have cut the dividend. I'm not 100% sure. Dividend growth, 0. Definitely always look at the 5-year CAGR and the dividend growth as well as the payout ratio when I'm looking at an investment for dividend growth here. But you'll see that they actually pay out monthly. They pay out 12 cents monthly there, and then it's actually a monthly REIT, so that's pretty cool. But if we go ahead and pull up the calculator, guys, we can crunch some numbers and then see what we get. But the first one we're going to try to calculate is how much of this company do you have to have invested to make $1,000 every single month. So there's actually so we want to make $1,000 every single month. There's 12 months in a year. So for the annual year, we need to make roughly about $12,000 on the year. If we look at the annual payout, which is $1.44, if you divide the 12,000 by $1.44, this will give you the total number of shares you need to own. So 8,333 shares that you need to own roughly to make about $12,000 a year. You can actually multiply this times the share price, so times 8. This will tell you the current amount of money that you need to have invested in this company right now to achieve that. So you'd need to have $66,666 invested in this company. A lot of sixes here. Yeah, quick way to calculate this is actually you could take the 12,000 you need to make a year. You divide that by the dividend yield here. So you do 0.018, and that gives you roughly around the $66,666 invested. So that's a quick way to calculate that. It'll give you a rough estimate there. Another one that you can do is, let's see how much you need to own to actually make $100 every single month. This one's a little bit more achievable because it would require a lot less capital. So we want to make $100 every single month. You multiply that times 12. So the full annual year you need to make 1,200. You can honestly divide the previous answer by 10 and that will give you the result, but if you look at the annual payout, you'll divide that $1.44, and you need to have about 833 shares, and then if we multiply this times the share price, you'll see that that will actually give us the total amount invested. So about $6,666 invested in this company to make about $100 every single month. Let's go ahead and do the last one, which is how much do you have to have invested to make $100 every single week? That would be pretty awesome there. So if we look, you're going to do $100. We want to do every single week. So there's actually 52 weeks in a year. So for the full year, we need to make $5,200. You're going to divide this by the annual payout, and you'll see $1.44. And you need to own about 3,611 shares. If we multiply this times the share price, that'll give us the total amount invested of money. So $28,888 invested in this company that you would need. Quick way again to find this is you do the total you need to own annually, divide that by the dividend yield, which is 0.18, and you'll see that you get roughly around $28,000. So that is what you'd have to have invested. I am going to be looking into potentially in the future videos, try to see how much, like in this one we need $28,000. But if you're invested for 5 years and you're reinvesting or you're dripping the dividends, you would actually require less capital. So I'm going to try to see if I can put something together so we can try to figure out those calculations. And I think it'll be really, really fun because you would need a lot less capital whenever you're dripping the dividends, as well if you're getting dividend raises and so on. I am not invested in this company. Let me know in the comment section if you are. And then this is actually it. Let's go ahead and wrap up this video by looking at the dividend yield, guys. So if we look right here, this is actually the dividend yield here. You'll see it's fluctuating depending on the time, and this is due to the share price of the company. So you'll see like around March 2020 is when it spiked up to about 15-18%, 20%, and then actually went down in 2021, and that is probably because the share price went up. And then you see that it's slowly been going up, and it's actually at one of its highest moments right now for this company, and that is probably because the share price has been going down. But that is the dividend yield. This is actually all I have for you guys in this video. Again, don't forget to subscribe with that notification. We're trying to get to 9,000 subscribers, so definitely help me out as well. Drop a big thumbs up on the videos, and let me know any new companies you want me to do if you don't see them on the list or I haven't covered them in the past. I will talk to you guys later. Take care. Stay safe out there. Bye, guys.